Thank you very much. Um, I'll try to keep it very interesting because however good the idea is, however good the product is, without funding, it's very difficult to scale it. So before the lunch, we will try to keep it as interesting as possible and try to get as much as insights from the funding folks. Quick introduction about myself before we go to the panel. My name is Aswani. I head investments at Capital A. Before VC, I was a founder myself, ex-Goldman Sachs, Deutsche Bank, UBS. Capital A is a early stage fund investing in clean tech, deep tech, and fintech. Check sizes 150K to 750K, and then we do follow-ons. More details as we speak. The format today, what I would do is I'll ask a question. Before answering the question, if you can give your introductions and then followed by answer, we can keep the time short and go to the point. As I gave the introduction, funding is very important, right? And we have seen EV as a new sector, which is getting a lot of traction in the last 5 years or maybe 6 years. Prior to that, there was some R&D stage as well. I want each one of you to share your experience in the last 6 years, how it has seen the growth, the changes, and what's your view in the next 5 years? Maybe Arnab, you want to start?
Yeah, thank you. Thanks for that, and very glad to be here in this event, and the energy that gets reflected on a very important subject is something which I think is reflective of the fact that we all understand the relevance and we all are on the same page in the way of the previous speakers, the previous panel has also highlighted the fact. Little big background, I come from SBI Capital Markets. So it's an investment bank for SBI, 100% subsidiary of State Bank of India. My own background, I was with Standard Chartered for 15 years, but in Middle East before I joined SBI Caps. I would not be having a full idea about 6 years because my SBI Caps journey has been for last 3 years only. But what I have seen over these 3 years is, and I have been interacting, I have taken mandates from firms who are involved in this space for fundraising, both through debt capital markets as well as from private credit funds. And few things that comes to my mind or what we have seen, I will just touch base on that and then post that maybe we can going forward deliberate on those points. A couple of things that comes to my mind is what we have seen is that one is the startup the segment who are looking at this sector, heavily involved in this sector and looking for funding in this sector. One very big dichotomy or contradiction that we see in this market is that the whole world is looking at green, right? And especially if you look at Europe and Far East Asia as well, very focused on green energy and trying to move away from fossil fuel. But if I am trying to take funding, or even if I'm trying to raise funds, and forget about the EV per se, even if I'm trying to raise funds for a green, suppose I'm trying to issue a green bond, in India at this point of time, I don't see the pricing advantage that I should be having. Because it's green, it is something relevant. Everyone has the buy-in to the fact that yes, this is something that needs to be done. This is something which is good to do. But when it comes to real money, right, we don't see that getting reflected in the pricing that happens. So that is one big contradiction which is there, which needs to be addressed. Good thing is that there are wealth people, there are family offices, there are PE funds, and there are foreign investors who are very keen to look at this space. There are certain foreign investors who are mandated only to look at this space. So that is something which is very encouraging. and they don't have the compulsion which many of Indian institutional investors have in terms of the requirements, in terms of the credit ratings or the business model that is run to fund something. Structures can be done, good investors can be found out. Only thing I think which we are finding difficult is at what price. Yeah.
Hi, good afternoon, everyone. Vivek Jain this side. I am representing Stride Green Capital. We are a platform. We are a platform which enables EV financing. Along with that, we are also asset management platform. We are a part of the Stride group. So Stride Ventures through to that fund. Through our various funds, out of our $500 million commitment, we have already committed close to $150 million to the clean tech space. And what we have done largely is looking at the whole EV ecosystem by investing in OEMs, charge point operators, mobility players, fleet operators, telematic service providers, battery recyclers. So essentially, what we are trying to create is a ecosystem play, and essentially we have done financing for all form factors. We are enabling financing for chargers, batteries, EVs across form factors, two-wheeler, three-wheeler, four-wheeler, buses, trucks. From a what we have seen over a period of time is, if you look at the e-mobility space, it can be divided into three parts. Largely the personal mobility, which is someone, me or you, we use for our personal use case. And then we look at the commercial mobility space where you have a lot of startups coming up, along with obviously Uber Electric is there, or Rapido is coming up. Similarly, Blue Smart is there. And the third is the cargo mobility, where a large portion of conversion is happening. So in the three use cases, the financing is largely available, and the lenders are able to take more calls on the personal mobility use case because they are not assessing the asset. What they are essentially looking at is the underwriting of the individual who is buying the asset, as compared to a commercial use case where for a fleet operator or for a battery provider or a charging infra provider, what underwriting has to be done is how a particular vehicle and the battery and the charger will behave over a period of time. Lenders, essentially, since it's a new new ecosystem, so over the period of time, there has been some positive movement, but still there's a lot of gap in understanding the residual value. That's what we are trying to bridge by creating models around the driving and charging behavior, which actually impacts the residual value and the secondary market. So essentially, in the last a couple of years, what we have seen is a lot of new technologies have come up. We have got super e-pumps being installed. We have got the new type of the batteries have been migrating from NMCs to LFPs to LTOs. The different chemistries are coming up. People have realized that the optimum size of a battery that is required. A lot of work is being done on the charging infra side, both from the public sector as well as from the private sector. So there's a lot of financing which is available for this. It's only that maybe what we as lenders need to look at is try to understand the asset better, look at what the end life of this particular asset can be, what can be the second life use case. So we have a lot of players who are not just from mobility, giving a second life in the stationary use case, but then you have the third life where you extract by a black mass, and then you can extract precious metals also. So there's a whole lot of journey that has been covered in the last 4-5 years. I would say this journey would be accelerated. We are at 2% of four-wheeler penetration on the passenger side as of now, which we were at a deliberation at MHI, and the government is clearly pushing the adoption, and there would be a lot of measures which would be coming from a policy perspective also. So lenders would be definitely be benefiting from that and taking larger calls as we move along.
Good afternoon, everyone. Weber here from Black Soil. So first to introduce Black Soil. So Black Soil is an alternative credit platform which is a sector agnostic. giving financing, debt financing to various industries. EV is one of the prime focus for us since we are witnessing huge amount of interest coming from VC players, investors, and whole lot of family offices. As Arnav was mentioning, the spectrum of investors have drastically changed in last couple of years. Previously, we used to see only large global players investing in the EV markets in India also, but right now, even the angel investors, the individuals, some of the strategic players are taking stake in the EV industries, and it's poised to grow from here. It's like we see that the kind of explosion which is happening in this EV market is second to none actually. Having said that, for the lenders like us who are there in every spectrum, right from the asset financing to the growth capital to the supply chain finance part of it, we see opportunity in every spectrum of it. So we have financed assets, we have given growth capital to the EV players, we have managed their balance sheet on the receivables and the payable side of it, and so forth. So what we are witnessing is that this is an interesting space poised to grow and a huge opportunity for lenders like us.
So my name's Darren. I'm a VP with Altiria Capital. We are a venture debt fund managing about $500 million of capital. I lead the climate investments for the firm. So when I joined Altiria in 2021, that's when we started covering EV as a space. At that point, it was even though just 3 years ago, from our perspective, it was a very nascent stage because there was not a lot of financial investor activity happening in the space at that point. Over the past 3 years, how we've seen the stage of business evolve is also one major reason for financial investors not getting involved from the equity side in the space was because it was quite asset heavy, capital intensive, right? Which our side of investors have stayed away from mostly, right? Because the probability of a non-linear outcome reduces, amount of capital required to succeed is very high. The kind of companies you're going against are behemoth, so it's difficult. Right. So initially, to bridge that gap, we saw there was a lot of play by strategic investors coming in. And as the ecosystem has matured over the past 2-3 years, now we are finally seeing financial investors also start investing in the space with time. So we're quite positive on the outlook from here on. It has always been a question of when for us as well. It was never if. This seems like the inflection point is here where more and more capital is coming into the system. From our perspective, what we are looking at our play being in the space is supporting enablers. So there will be, like Vivek said, right? One of the points he said was there's a difference between taking a asset risk and a borrower risk, right? Until now, our lenders have been used to taking borrower risk. Given this is a new space, and you can do that because the price of the asset is very standard. And on the consumer side, you can go and lend again. That's why in four-wheeler passenger vehicle, you won't see a lot of startups having a play, right? Because over there, the vehicle form factor is much larger. There's not much risk. And you have financiers also actively playing a role there. But for large-scale adoption, commercial EVs will lead the charge, right? And for that to adopt, you need players to come in and have a view on the asset, underwrite the asset, the charging patterns, the battery life, etc. So that's why we've been actively investing in companies who are solving for that, right? Who are either solving from that from a financing perspective or solving from that from an analytics perspective. So quite excited about the next 3 years from here on. Yeah, take a pause here.
Sure. Thanks, guys. See, most of the EV companies are not just technology, and there is a lot of material or hardware packed into it. So a normal equity funding, as they speak or they're normally referred to, is very expensive. It's an excellent opportunity that we have Vaibhav and Irene here. My question to you guys is, if a founder is having an EV startup and there is some technology which is already in place and attracting some equity, at what stage do you think they should come for venture debt? What is your methods of evaluating it? What is the ratio between the equity and the debt you normally give? I think it will be very useful for the founders here to consider that debt is also an option coupled with equity. I want you both to put some light on it.
So debt is definitely an option. So what happens is when we underwrite any, for that matter, not only EV but any sector which is like seeing some kind of innovation. The first and foremost thing which we try to underwrite is that whether the product acceptability has happened or not. If that has happened, and so there are like a couple of validations, right, to it. One, there is an investor sitting on it, a investor of a decent pedigree is sitting over there. There is a some kind of strategic partnership which has already happened. So that gives us confidence. Okay, the product accessibility has already happened, so we can take a bet on it. Now, for a debt player like me, which therein can also confirm. So we have to see that I'm not taking an equity risk, right? I'm a debt player. My upside is limited and my downside is like unlimited. So what I try to see is that my return off capital is important rather than return on capital, right? Because my upside is limited over there. So if I'm convinced that the cash flows which would be generated out of this new innovation or new technology is sufficient enough to make the repayments decently in a decent time frame, I'm okay to take a risk even if the company is loss making right now, and there is a visibility that company would start generating enough cash flow that should be able to repay my debt. If I'm able to tick 3-4 those boxes, I'm ready to take a bet on those players.
Yeah. So I think the bar will go up from here, right, to attract capital, both equity and debt, by EV founders. I think the first wave of investments in the space has happened on the back of interesting technologies and prototypes, etc. But from here on, even given the winter, as we call it, over the past few years, and now with certain players breaking out of the huddle, right? Like you have certain large outcomes which have happened in the space, like Ether, Ola, you have Battery Smart, right? So companies have scaled significantly well. I think a lot more onus will be there, a lot more requirement will be there on these companies demonstrating a sustainable growth path from here. So that does not mean that the companies need to be profitable, because then there's no play for us. And the whole point is for these companies to grow and scale and capture the opportunity, right? The penetration of EV as we speak is still 1-2% on an overall basis. It is more so that at the unit level are you making money. Right. So the first test I would have is firstly is the product selling, which is quite basic. Right. What kind of scale is there? What kind of market penetration is there today? Is it like a Me Too product, or is there some differentiation over there? And beyond that, when you're selling at a P&L level, you may be losing money. At a cash level, you may be losing money, because as a company, you will invest into multiple initiatives. Right. But your singular core product, how is that performing in the market? I think even for investors, that will be important, because this is a business which requires a lot of capital. There's a hardware element to it as well. You can't bleed money. And the initial wave of capital which came into these companies because they were building like pioneering technology for the first time, right? Now that test will be stronger, right? Because for the technology to drastically change from here, right? Like there are questions on whether EV or hydrogen, hybrid, solid state, etc. Right? Those things could still, if there is a strong shift in that manner, then there could be a large wave of capital that goes towards proving that out. But within the current technologies, you need to demonstrate stability to attract capital.
Thanks. Arnab, you have seen almost 20 years of debt and credit in your experience. We are hearing a lot about MSME exchange and EV being popular. What I mean by that is end consumer also aware of the vehicles because they are using close to the consumer, and it kind of falls in a segment where it is known by everybody because people are seeing it and the adoption is happening as we speak. What is your view on EV startup companies or EV ecosystem taking part in MSME?
Very interesting, a very interesting point of view, honestly, because see, the way we see it, we being from my firm, we get involved in, say, for example, another aspect, another slightly unrelated, but I believe they will eventually get related to each other, is the urban infrastructure as well, right? The municipalities and how they're coming up. There is an index that has been created on the municipal bonds as well. Now, is that a way forward? Is that going to give you the delta that you require in terms of the pickup in the ecosystem, in the equity market? That is something we will have to look at. Now, do we have enough traction to start an exchange for that? I have my doubt, honestly, but I guess that is a way forward. That is a way forward. See, when suppose someone like Black Soil or any other debt fund who is coming in, right? We start off saying that fine, I am putting in money. What is the exit that I have? Without a clear visibility of the exit that I have, I would be very apprehensive of putting in the money. I may not have the cash flow defined as of right now. So I am fine with having a 3-year moratorium, 4-year moratorium, but I need to have a very clear exit strategy that has been built into the model. So that, because at the end of it, I am just an investor. And as we were discussing right now, we are not taking equity risk here. We are looking at only at the return, right? So having something which is in the exchange where the participation is high might give an exit strategy, that might give an exit for us, right? So that will entice people to come in, saying that yes, it does allow an exit that to happen for the debt funds, which otherwise would be little reluctant. Correct? Yeah.
Should I add? Yeah.
Vivek, I specifically want to ask a question on underwriting because you already spoke about it. And India is at a stage where we are slightly technologically advanced compared to a lot of other countries, right? I mean, especially on the fintech side of it. If you can put some more light on underwriting what you are doing on your financing, it will be great because already EV is a new technology. We already spoke about different types of batteries and new companies coming into picture. What is your underwriting essence and how is it has evolved in the last 18 months or 2 years? And what are you gathering more data on interacting with the systems and batteries and so on and so forth?
I'll divide this into two because I have been investing from a fund as well as we have been investing from an asset perspective. So directly, every asset is being financed as compared to a balance sheet of the entity. So when you look at a balance sheet, then you obviously, which both my co-panelists actually covered, you look at the product market fit, you look at the monetization. Obviously, some investor community members are there or not, and then you look at whether the debt can be serviced within the time period that we are giving the facility for. But at the same time, now given the kind of business this is a very capital intensive business for a large portion of the ecosystem, and it would always make sense for leverage in this business for a better ROIs for the equity investors, for the founders. It would always make sense for them to leverage the business and go for debt. While we are looking at those technologies, I think what we also look at is what scale that technology can get them on, and that is the linkages that you can actually, as an ecosystem player, can build also. And you can that is what we also do, that we help our investee companies to build those linkages in the ecosystem. So from a fund balance sheet perspective, there are multiple things that a lender can also enable for a startup. Now coming back to your question on from an asset level perspective, what we are looking at. So I would divide this into again 3 parts. One is the electric vehicles, one is the charging infra, and the third piece is the battery. So if you look at the charging infra, largely there is a lot of standardization which has come in. So you have type 6, type 7, large part of the OEMs, startups are also, taking one or the other side. Similarly, there's a CCS2, which has come out. So a large part of your charging infra is standardized. It's only the speed at which the energy is being dispensed or how it is being monitored is something that people are now working on, and those technologies obviously have seen that kind of adoption. So charging infra is something which has become the new, I would say it has stabilized. So there's a lot of traction from lenders to finance that kind of a charging infra. On the vehicle side, across form factors, on the two-wheeler side, so there are some vehicles which are dedicated for personal mobility. There you don't, there the lenders don't need to largely, because larger banks and institutions are there who are financing that. Then there are the B2B mobility use cases, which on the two-wheeler side, that is where the fleet operators are operating. That is where we are also trying to ensure that the data that is coming out from the vehicle is actually the platform that we have created enables the lenders to actually monitor the data. We are creating insights and then alerts for lenders on top of it. So essentially, while underwriting, we are providing them that kind of understanding of all the assets, but on a real-time basis for their early warning signals, for their probability of defaults, that is something that we are supporting them with. So that is on the, I would say, and that is across form factors. That can be a electric vehicle, that can be a charging infra, that can be a battery, because all these devices are smart devices. So on the battery side, till now, a lot of use cases are there for NMC and a lot of use cases are there for LFP. Both these batteries will coexist in the near future as per our understanding, and depending on the use case, so for a intracity use case or an intercity use case, depending on the charging infra availability, so these batteries will keep on growing, and there are a lot of battery players, the new battery players, the panel before us also discussed that, who have come up, and those technologies are already established. So there's a lot of comfort that a lender can draw from those kind of technologies which are adopted by the masses. I would say from a fleet operator perspective, from a mobility perspective, there are a lot of solutions available. There are short-term solutions available in the form of lease. There's a long-term solution available in the form of financing. Then the rentals are available where we have specific players who are deploying the assets on rentals. So you can underwrite all type of models by looking at the cash flows, and you can actually do the linkages with the aggregators, you can do the linkages with the off-takers and provide such kind of credits to them.
So yeah, completely echo your thoughts. In fact, I feel there is a very large opportunity that exists today because of the underwriting standards changing in EV. Until now, so any new asset class which has come into lending, even something as standard as gold or MFI, which have been the recent, or credit cards, right? It takes 2 cycles for conventional lenders to come in and the asset class to mature. In EV, there's a large opportunity available for lenders, like you said, because of new age underwriting methods that come in, right? These are smart vehicles with connected to the cloud, right? So you can underwrite these vehicle in live situations. So if there is a borrower, for example, which is not eligible for a loan on a standalone basis, but is looking to buy a 4-wheeler commercial EV, a Tata Ace, to expand his business, right? But his credit profile does not stack up. And there is an EV platform which extends that loan based on that asset to the borrower. They can take a differentiated view today because based on how much the vehicle is running every day, which data is fed into the cloud on a daily basis, you come to know whether the guy will default or not. Right? And that's why it presents a large opportunity for new age players to come with new age underwriting standards and capture the market.
I mean, it is very interesting because the amount of data what you are gathering, you can literally define how the driver is. You can co-create insurance policies for the driver. You can manage when he is driving or when she is driving the vehicle and put a rota on who can use the vehicle. Monitoring is, I mean, a lot of data. It's a very interesting subject, and I'm sure we will see a lot of changes in that field. I mean, as you all know that vehicle, and especially we are in Chennai, which is like world's one of the top component manufacturers for the automobile industry. While OEMs, you see it outside, but there is a lot behind that particular OEM or particular vehicle, what happens behind the scenes. Vaibhav, I want to understand your view on where is debt financing and what is happening in the supply chain component and alternative or behind the scenes EV side of that.
So supply chain finance is just like a blood, right? So you need working capital to run the business. So what we have seen in this new age companies or EVs is like some of the product couldn't take off because they built the product but they couldn't get the working capital to run it, right? So you need that working capital to run that particular product. So what solution which we have seen, in fact which Black Soil is also providing, is that so there is a balance sheet problems like on the receivable side and on the payable side, that the guys, since they are like new to the traditional finance, they have to pay immediately but they receive money at the end of a credit period, be it 60 days, 90 days. So what we are doing, or what other supply chain finance players are doing, is like they are solving both the problems on the both sides of it. So they are paying the vendors immediately and giving the credit period to this guy, saying that you can pay me after 60 90 days, and discounting the receivables which is supposed to come after 60 90 days on an immediate basis. So they are just reversing the problem and creating a liquidity for the companies, which is of a paramount importance for this new age players. So what is happening is that the promoters or the founders of this EVs, or the charging station or the battery players who was supposed to dilute his equity further, actually can resort to this supply chain finance solutions and can avoid further dilution of his equity. Because if the dilution happens too much, then even the interest may get lost. Actually, since the skin in the game remains intact, the promoter can concentrate on growing the business rather than worrying about this working capital problem. So this supply chain finance is really helping them in concentrating on the business, growing the company further, and making interesting for the investors alike.
No, very interesting. Without the support at the component level, it is very difficult to build an OEM or the entire end-to-end ecosystem. Arnab, when we talk about ecosystem, policies matter a lot. What is your view on the current policies and any talk of the town which is going to happen in the next few months or so?
I can't say what is going to happen. Of course, there is a budget which is coming up, and I hope it is going to be friendly. And actually, it should be. The ask of the market is for it to be friendly to this sector. Couple of things which I believe different stakeholders can look at, and I think there is some discussions happening. I don't expect it to happen immediately. One is, of course, in a way, if we can put this into the priority sector lending bit of it. It has been asked so that there is a push for the institutional investors to look at it, look at financing this as something which they need to do. Every new initiative, every new avenue of financing does have its teething problem. A little bit of nudge like this. Obviously, there are diverse views. Some people say that the moment you put it in a to-do list, people try to find out ways to avoid it. But I guess this is something which should happen. The other thing which I think on a policy side we should look at, my take, and this is not as a banker, my take has been that the development on this space has been concentrated on few parts of India. It has not been uniform across the country, and understandably so. So we know Chennai, we know Hyderabad, Bangalore, Gurgaon, Noida, Mumbai. Even if you look at Mumbai, BKC in Mumbai. So. But suppose if I can look at urban infrastructure development, and because there is a big push happening for urban infrastructure, and if I can put in those charging stations as a part of urban infra development goals, and put them as a part of your green initiative, and if we include that, because many of the multilaterals are very keen to fund this urban infrastructure green spaces. If we can put those things together, I guess we should be having a head start on this aspect. Yeah.
We are also expecting the same. One last question before we do closing comments. Therein, we have mammoths in the automobile industry, right? I mean, people who have been in the business, or the conglomerates who have been in the business for last 40, 50 years and doing a lot of exports as well. But EV has given a chance for a lot of newcomers. How do you gauge the risk involved in funding these companies compared to the mammoths who are already available in the industry?
No, this is quite interesting question. So over here, see, the cost of launching an EV business versus ICE back in the day has dropped drastically. Right, because the amount of moving parts involved are lesser. You don't need to build that depth of supply chain. You don't need to invest so much into infrastructure. So it's become easier to invest and launch these businesses from an OEM perspective, right? So that's why a lot of, if you see a lot of conventional players and other businesses are also joining the bandwagon and launching businesses in the EV space. Like, for example, just before this on the panel, there was Omega Seiki, right? They have a steel business launched into joined EV. Similarly, Murugappa Group has launched TI Clean Mobility, right? So a lot of such players coming in. And at the same time, you have large behemoths also operating in the space. Mahindra, Bajaj, Tata, all have their products as well. But having said that, I feel like we are going through a strategic shift right now. The whole industry is changing, automobile industry as we know it. Right, some will resist the change, some will go along with it. Right, this has happened across industries multiple times. Right from internet or AI back in the day, memory chips moving to semiconductor chip. So across the board, this has happened, which also presents an opportunity for new age players to come in, which is what is exactly happening. Right. You wouldn't expect someone like you wouldn't expect a startup to come and occupy a 50% market share in the or 20% market share in the two-wheeler electric space, right? But that has happened today. Similarly, if you look at three-wheeler cargo vehicles, which is a small market today, barely 5,000-6,000 vehicles a month, but it is occupied 80% by startups, right? 70 to 80% occupied by startups. So there is a wave that is coming, and there is a switch happening, right? So if these startups can build products which are highly differentiated, then there is a possibility for them to grow as well.
Makes sense. Makes sense. Thanks a lot. I mean, we have seen a lot of EV, especially two-wheeler adoption in the APAC, China, and all of these regions. I want your view and few closing comments before we conclude the panel. Arnab, we can start from you.
No, as I started of saying, this is an evolving space. The question that you asked as well is that more and more people, because they see value in it. It is something which is starting, which is obviously it has moved a little bit further, but there is a journey that has to be taken, and everybody wants to be a part of the journey. All the stakeholders, as I see, be it the domestic financial institutions, be it the PE funds, be it multilaterals, wants a piece of it, that development. And the very exciting bit of news is that at the government circles also, there is a buy-in that this is something which we needs to be encouraged and done. So I am very hopeful, and hopefully this is like, as we see the startup system having taken the initiative, the next level of their journey will be supported by all the other stakeholders in the market as well. Yeah.
From a future perspective, I would say that we are the largest two-wheeler market as we see it growing. We are the largest consumption market, and the whole world is coming to invest in India. So there is a lot of traction on various assets, lot of traction on various kind of technologies. We have been part of government consultation, so there's a lot of push which is coming from government. Definitely, a lot of work being done under the wraps there, and which will definitely come and propel this. So from a public support, from a policy support, there would be a lot of support coming in. Definitely from a Private support, we have, we as Stride have already committed that in the next 3 to 5 years, we would be investing 500 million to a billion in this ecosystem. So there is a lot of push which all the type of players are bringing in. So we see a very positive approach to this.
So as my fellow panelists said that, there are a lot of tailwinds in the sector, be it from the regulatory side, from the investor side. In fact, a lot of common people are also aware about the environment, and so they want to adopt to the cleaner energy. So they are interested in buying more and more EV vehicles, and that is why we are seeing such a growth happening in this sector. So yeah, interesting sector from everyone's point of view, be it a debt player, be it an equity investor, be it a strategic guy. So yeah, we are looking to this sector with quite interest, and hopefully we should crack the code sooner or later.
Yeah, I think same here. Quite positive as everyone over here, not only this panel, but everyone at this event must be quite positive. That's why we're all here. So we see, I think the initial investment has happened in the segment, a lot of growth expected. You have different categories of investors also taking a play, both foreign, multilateral, strategic, right? So a lot of capital coming into the space. It will only grow from here. We need governmental support as well. Geopolitically as well, I think we need to have incentives on the demand side in terms of FAME getting renewed. At the same time, there needs to be a robust recycling policy as well, because there is dependency on critical commodities over here, which we are dependent on foreign supply chains for. So as we solve for that, I think it's a very interesting point where we are at. We continue to stay positive and hope to partner with more and more companies in the space.
Totally agree with you all. I think we are just scratching the surface, and it's an excellent opportunity for us to build something which is from cradle to grave kind of thing, complete sustainability we can achieve and move the ecosystem to EV, not only on the road, but even in the air. So with that, really thank for giving us the opportunity to talk about the funding and the financing opportunity in the EV space. And I will not hold you all anymore for the lunch what is already being served. And thank you very much and have a nice day.